Friends, welcome to Yadnya Investment Academy. In our earlier video on new mutual fund categories defined by SEBI Part 1, we had seen categories defined within the equity schemes. And in this video, we are going to talk about categories defined in the hybrid schemes. There are a total of 6 categories defined in hybrid schemes. The first one being conservative hybrid funds. Now, these funds need to have 10 to 25% of their total assets in equity and equity related instruments, and they need to have 75 to 90% of their total assets into debt instruments. And the type of schemes these funds need to specify is that these are an open-ended hybrid schemes investing predominantly in debt instruments. The next category is wherein the mutual fund house can either have balanced hybrid fund or an aggressive hybrid fund. If they choose balanced hybrid fund, they need to have 40 to 60% of their total assets in equity and equity related instruments and 40 to 60% of their assets into debt instruments, wherein they cannot go for any arbitrage opportunities. In the type of schemes, these funds have to specify that these are open-ended balanced schemes investing into equity and debt instruments. If the fund house goes for aggressive hybrid fund, these funds need to have 65 to 80% of their total assets into equity and equity related instruments and 20 to 35% of their total assets into debt instruments. In the type of schemes, these funds would have to specify that these are open-ended hybrid schemes investing predominantly into equity and equity related instruments. The next category is of dynamic asset allocation or balanced funds. These funds can invest into equity and debt that is dynamically managed. In the type of scheme, these funds have to specify that these are open-ended dynamic asset allocation funds. The next category is of multi-asset allocation, wherein the fund can invest in at least 3 asset classes with a minimum allocation of at least 10% in each of the 3 asset classes. In the type of scheme, these funds have to specify that these are open-ended schemes investing into 3 different asset classes, and they would have to specify the names of 3 different asset classes chosen for investment. The next category is of arbitrage funds. These funds would have to follow arbitrage strategy, wherein the minimum investment in equity and equity related instruments has to be 65% of the total assets. In the type of scheme, these funds have to specify that these are open-ended schemes investing into arbitrage opportunities. And the last category in hybrid schemes is equity savings fund. These funds need to have a minimum of 65% of their total assets in equity and equity related instruments, and they need to have a minimum of 10% of their total assets into debt. These funds would have to specify minimum hedged and unhedged allocation in their scheme information document, along with asset allocation to be followed under defensive considerations in the offer document. In the type of schemes, these funds have to specify that these are open-ended schemes investing into equity, arbitrage, and debt. So with this, a mutual fund house would be allowed only one fund per category in case of hybrid funds. And in respect of the existing similar schemes as well as those that are not in line with the categories that are defined by SEBI, the mutual fund houses would have to complete their course of action, that is winding up, merger, fundamental attribute change, etc. as of now by end of June 2018. So friends, that's all on this video. Hope the video has been useful. Thanks for watching this one. Watch this space for more such topics. If you have any questions, do let us know in the comment section below our videos. And if you like our videos, please do subscribe and share. Before we end, we want to let you know that Yadnya Investment Academy's first book, which is a collection of 108 questions and answers on mutual funds and SIP, can be bought on Amazon, Flipkart, etc. And the link to buy the same is mentioned in the description of this video. So see you in another video. Until then, happy investing.